Hello and welcome back, everybody. We go on with our exercise cases to train you a bit with value-added text. And as you naturally know, we should do it this way that you first have a look on the case description, then stop the video, try to make an own solution by using the text act translations, writing down an own solution on a piece of paper, then start the video again and try to compare your solution with mine. So let's have a look on what has to be done. Okay, so there is the Nice Offices SE, so it's a European company. Abbreviation knows it's a company with registered office, or seat as we in Germany call it sometimes, and place of management in Frankfurt in Germany. Nose imports desk from a foreign producer from Japan to Germany. The desks are sold by the Japanese producer to Nose for a net price of 10,000 euro plus VAT if any VAT arises. The transport to Germany is organized on the order of the German customer, so by the order of Nose, by an Italian forwarding agent for an amount of 2,000 euro. This amount is later paid by bank transfer, so you don't know if it's net or gross, however, that's the amount which is paid. On the border, the forwarding agent pays the importation VAT on the value of the desks in the name of the German customer Nose. It amounts to 2,280 euro on an importation tax base of 12,000. The imported desks have been insured by a contract with a German insurance company for an amount of 500 euro, so that's the premium, naturally not the insured value. And the contact between Nose and the Japanese producer had been established on the request of Nose by a German agent who received a commission of 100 euro for that. He charged Nose with 100 euro plus 19 VAT for that efforts of his in an invoice. So what happens here? Let's analyze the contracts again. So we have a Japanese producer from Japan, naturally. It does something for Nose, that's selling desks. Then we have the Italian forwarding agent located in Italy doing something for Nose. This is the first contract, this is the second. In the first contract, goods go from Japan to Frankfurt, and in the second we don't need to look for the movement of something because that's a servant. No, not a servant, sorry. It's a service, naturally. And for services, we don't have a beginning and an end because services don't have a location, naturally. So then we have another thing. The insurance company does something for Nose because they insure the transported goods against damages. So that's contract number 3 on the list. That is a service again. So borders don't play a real role. We have an agent doing something for Nose, again a contract number 4, again a service, so we don't have to worry about borders. Let's begin at the beginning. That would be contract number 1, and here you have a comprehensive solution. The Japanese producer sells to Nose in Frankfurt. The first thing we have to check is taxability. So we test number 1 as always. Let's first deal with the 3 simple criteria. The Japanese producer is an entrepreneur, acts within the range of his enterprise because he sells desks and that is what he produces, and it's for consideration because he wants money. So now to the more specific things which really matter. What he does is a delivery according to 3.1 of the USDG because it's tangible goods, and he transfers ownership, or to be more exact, as you know, not ownership matters, but the position like an owner, so economic ownership. Um, Under basic rules, the place of delivery would be where the dispatch or movement of the goods towards a customer begins. 3.6, sentence 1. That's in Japan. However, in all cases where a good comes from a third country, here Japan, into the German inland and crosses the border so that importation VAT is paid, then there is a special rule of 3.8 to be tested. The place of delivery is shifted to the inland, so to Germany, if the deliverer or somebody acting for him pays importation VAT on the German border. And let's look to the case. Who pays importation VAT? The forwarding agent, but as representative of the customer. So 3A does not apply, and so the place of delivery stays Japan, and as Japan is definitively not inside Germany, so not in the inland, evidently the whole contract is not taxable at all, so that matter has been decided and closed. Good. So let's look to contract number 2. Contract number 2 was the forwarding agent from Italy does something to the nose company in Frankfurt on the Main. In Germany, generally abbreviated FFM. So if you ever come across that abbreviation, now you learn something for your actual everyday life. Okay. First step is again, is the whole thing taxable? We have to test 1.1 number 1 again, because 1.1 number 5 is out of the question. That would be an intra-community acquisition of goods, you know that. And 1.1 number 4 does never affect us because we are not working at the customs border. So the first 3 things are again the simple criteria which can easily be checked. The guy who does something here, the forwarding agent, is an entrepreneur. He is independent, acts within the scope of his enterprise, because if he is a forwarding agent, what he does here is he organizes a transport. That is the main activity of a forwarding agent, so it's definitively a part of his enterprise activities. You remember also an ancillary or additional activity would have been sufficient. However, here we are plainly in the middle, in the core of his enterprise activities, so definitively fulfilled. And for consideration, yes, the guy demands a price, that is so for consideration. These three criteria are therefore done with, and we look again to those which are really interesting. Do we have a delivery or a service? Well, what a forwarding agent does is organizing things. That's a service under paragraph 3, subparagraph or section 9 of the Umsatzsteuergesetz. Simple and plain. So the place of service has to be determined. The basic rule would be 3A2. If you render a service to somebody who is an entrepreneur himself or herself or itself, depending on the legal form, here itself, it's a company, then the place of service is deemed to be where the customer has established the business, so that would be Frankfurt. We have still to check if any special rule deviates from that, also changes it in 3A. Subparagraph 3 to 8 or 3b, there is no deviation from that basic rule which applies to our case. So Frankfurt remains Frankfurt and the place of service. That is inside Germany, so the transaction is taxable in Germany because all the 5 requirements of 1.1 number 1 are fulfilled. Next step is the tax exemption. So we have to look through paragraph 4. And here comes into the question for number 3. You remember, I hope at least, that was that entry in paragraph 4, tax exemptions, which referred to cross-border transports. If they related to goods of exportation, one possibility, or if they related to goods of importation, if the transportation costs are already included in the calculated customs value of the imported good. That's now what we have to look on. So if we inspect here the calculation of the customs duty, we find out that 10,000, the price of the desks, plus the 2,000, the cost of the transport to the inland destination, have been both included into the customs value, so have been already subjected to importation VAT. Because of that, the transaction is now tax-free. So the transport is tax-free because the customs authorities have already levied importation VAT on the corresponding amount of money. The tax base would be 2,000 because it's a net amount if things are tax-free. And in case that you have overlooked the tax exemption and regarded the whole thing as taxable and liable to tax, then nevertheless the tax base would be 2,000, because if an Italian entrepreneur does something which is taxable in Germany and he does it for a German customer who is also an entrepreneur, then it would trigger the reverse charge mechanism of here Germany paragraph 13b. So the customer would have to pay the VAT on the service, and that means the payment made to the foreigner would be, by definition and by compelling logic, automatically a net. Now we naturally remember that in reality the transaction is really free of tax, so a tax rate and tax does not apply. The taxpayer is knows, so the customer under 13b. However, here there is basically no actual duty combined with that status, because a tax declaration no 13b basically refers to taxable and liable transactions. If it's tax-free here, nothing happens, nobody cares probably. The point of time would also be fixed by 13b, however, no great consequences. To continue the whole thing, if we think about the invoicing, then you know naturally if it's a tax-free service, then the invoice charges the next net price. You are not allowed to confirm any VAT if nothing is paid. And in order to make your customer and the tax inspector not more nervous than they need to become, it's also demanded that you give a hint to the existence of a tax exemption on the invoice, so that everybody else sees you have not simply forgotten to charge VAT, you had a reason. Declaration duties, that's something interesting. In cases of a cross-border service rendered by an EU entrepreneur to an to an enterprise in Germany, or to any other enterprise in another EU state, then you have to hand in a recapitulative statement where you list the VAT identification number of your customer plus the net amount of the service, so that the tax authorities responsible for the tax inspection of the customer can check if the customer has perhaps forgotten to pay tax on things like that. However, naturally here it's not a taxable service at all, so probably I exaggerated a bit in demanding a tax declaration here. If I reconsider that, it's probably not necessary. There are no other peculiarities. And what is interesting, if the Italian forwarding agent had any input taxes in Germany, for example, bought some, I don't know, stuff for his enterprise here, although we have the principle that usually if your output is tax-free, then your input tax is not refundable or not deductible. Here we deviate from that because it's an export-related output, or at least an output which is meant for another state, so a cross-border sale, and in these cases the input tax of the supplier or of the service provider remains fully deductible and refundable. You can find that out if you read paragraph 15.3 number 1 of the Umsatzsteuergesetz. There it is said that the input tax is preserved despite the tax exemption if the exemption is listed in paragraph 4 numbers 1 to 7, and you remember we had an exemption under 4 number 3, so that's covered. The input tax remains deductible if there is any, which we don't know. Number 3, an insurance company does something for knows the customer. They insure the transport. To test this again, number 1, and we begin again with all those easy things. The insurance company is an entrepreneur. Yes, it is. Acts within the scope of their enterprise, because if an insurance company sells an insurance contract, that is naturally their main business. They do it for consideration because they demand a payment. Give somebody protection against damages is a service, so paragraph 3, subparagraph or section 9 applies. The place of service is basic rule 382, the place where the customer established their business, so that's Frankfurt. There is no special rule in 3A or 3B or anywhere else which might change that, so the place of service remains Frankfurt. Frankfurt is is in Germany, so everything is fulfilled. 5 criteria are okay, so number 1 applies. The whole affair is taxable in Germany here. We have now to look again for a tax exemption. And in that case, you remember 4 number 3, services immediately relating to goods exported or sometimes also imported, as here, might be covered by that rule. But 4 number 10 is the more special rule, so that 4 number 3 is explicitly excluded for these cases. 4 number 10 applies. Insurance contracts are tax-free. Taxable is the premium, the net amount, 500 euro. That's no problem. And when we come to talk about the taxpayer, then it's the insurance company, because paragraph 13b does not apply here. We don't have a foreign service provider, but a German insurance company. And insurance contracts also are not nowhere in the list of the transactions for inland 13b cases in 13b2. So the regular rule of 13a applies. The taxpayer, that is the entrepreneur who does the service, so the insurance company. The invoice must be net and must name the exemption. Declaration duties, yeah, perhaps the insurance company has to hand in a VAT tax declaration, but if so, everything's tax-free. So that depends if they also have some relevant things, or if they completely only have tax-free turnover, then nothing happens. Nothing peculiar which the testing scheme wouldn't cover, so especially no wrong with invoice or any similar stuff. When it comes to input tax questions, then it's clear that the customer knows in Frankfurt doesn't have any input tax refund claim, because they are not charged VAT, because it's tax-free, so VAT to them is 0. The insurance company, however, also has no right to any input tax claims for their related input taxes, for example, for office costs, stationery, writing material, computers, and so, because their output is tax-free under 15.2 number 1, this triggers that their input is also not deductible. 15.3, which revives the input tax refund in certain cross-border cases, is not applicable to insurance contracts. And as we remember, this is not even a cross-border case at all. So simple. Last aspect, the agent in Germany does something for nose in Frankfurt. We have again to test 1.1. Number one, the agent, let's begin with the simple stuff again. The agent is an entrepreneur, acts within the scope of his enterprise activities because bringing people together to conclude a contract is the main activity of such an agent or broker. He wants to get paid because he demands a commission. So everything is fine. It is a service, not servant, service, what he does, paragraph 3.9. The place of service is again, perhaps, Frankfurt. Yeah, because the special rule of paragraph 3a3, number 4, that intermediation services are to be taxed at the place where the underlying contract is established. That does not apply here, so it's taxable in Germany. Now let's ask for tax exemption, and there you perhaps remember paragraph 4 number 5 of the Umsatzsteuergesetz. The underlying contract which he brings the parties to sign is taxable in a third country, and there is an exemption for rendering intermediation services with regard to transactions which are taxable completely in a foreign country, in a third country, sorry, in a non-EU country. That means the whole thing is tax-free. The tax base is the net amount then everything what is paid minus VAT. VAT is by law 0. 119 are paid, so that's automatically net. You will now ask, well, but the guy wrote an invoice 100 plus 19, so 100 must be net. No, the legal formula is everything what he gets minus the VAT included, and not minus what he thinks is the VAT included. These small details matter. So VAT included is due to the tax exemption of 0, so 119 is by definition net amount. The taxpayer is the German agent under 13a number 1, so the same rule as always. The arisal of the tax or tax point, so when the tax begins to exist, is the same rule as always. The invoice should be net and should name the exemption. Declaration duties would be tax declaration of the agent as always. Peculiar aspects are, well, the invoice has been wrongly written. Here our agent stated VAT in an invoice where VAT is not due. That means that for our agent, only due to the fact that he confirmed VAT in an invoice, the 19 euro are now due to the fiscal authorities. Under paragraph 14c, writing out a wrong invoice confirming higher VAT as due under the law for your transaction triggers as a consequence that now you have to pay that exceeding amount just because of the wrong document. You can, however, correct the wrong document. However, again, this has not yet happened here. So until now, the agent still owes the 19 euro to the fiscal authorities. When we now go over to input tax claims, NOS cannot deduct the VAT of 19 shown in the invoice because you can only deduct VAT which is due for the delivery or the service, but not the VAT which is due to errors. So the agent has to pay the 19 and NOS cannot recover them. If the agent himself had input tax related to his services, to his efforts, he would be able to deduct them because for number 5 is an exemption which is in the list of 4 numbers 1 to 7, and if an exemption is on that list, then the input tax claims remain existing in spite of the tax exemption for the output. See paragraph 15.3. And well, that's it. So that was our master solution to this small case. So if enough for today, enjoy the case and see you back soon on the channel. Goodbye.